Well, hello everybody. Welcome to MetalshubTalks, our webinar series dedicated to discussing and exploring the intersection of raw materials and the digital world. I am your host, Samir Jaber, and in this episode, we will discuss how procurement performance is measured today in the steel industry and where the gaps remain. We'll look at the market and recent events. We're currently navigating a poly crisis in the industry, if I may call it so. Just this month, we've seen natural gas prices spike by about 23% following the disruption in the Strait of Hormuz. And when there's an energy story, there's a metals story. We're seeing energy intensive alloys like ferrochrome and silicomanganese almost decouple from their raw material costs as energy surcharges take over, not to mention the need to meet sustainability expectations and compliance requirements, all these placing new demands on procurement. And in this environment, traditional ways of measuring procurement performance can be quite limiting. So, to help us navigate all that, I have the perfect guest here today, Dr. Sebastian Kreft.
Hello.
Hi. So Sebastian is the co-founder and managing director of Metalshub. He has over 15 years of experience in strategy, metals trading, and commodity markets. And together with Dr. Frank Jekyll, they share a clear mission for Metalshub, and that's to combine marketplace and software features to bring greater transparency, efficiency, and data-driven decision-making to raw material trading across the metals and mining industry. So, Sebastian, I hope I managed to cover your description well. Thank you for joining me here today. If there's anything I missed, please share as well.
Yeah, thank you for the kind introduction, Samir. I think you summarized it very well. So since 9 years, Frank and myself, we're the founders and the managing directors of Metalshub, working with steel mills around the world on raw material procurement. And before that, both of us worked at Anglo American, which is a mining company, where I was in charge of selling ferronickel and nickel metal, and Frank was in charge of selling ferroalloys such as ferroniobium.
Great. Well, again, thank you for being here and for joining me today. But just before we jump into the discussion, I'd like to do a bit of housekeeping and talk to the people who are attending here today. If you haven't joined one of our webinars before, just very simply, at the bottom right side of your screen, you'll see there are a couple of sections that you can click on and interact with us. One is the chat section, and that's where you could actually just share your name, where you're coming from, where you're joining us from, and what are your expectations of today's webinar. We'd be happy to have that chat with you. And there's also the question section, and that's something that we will get to towards the end of our discussion. There's always a dedicated Q&A session. So any questions you might have throughout the webinar, please do ask them there, and we'll make sure to engage with you towards that time. But Sebastian, let's jump straight into the deep end here. We're sitting here in March 2026, and a procurement manager might see their input costs jump by a double-digit percentage in a single weekend because of these geopolitical shifts that we're seeing today, like the ones we're seeing in the Middle East, for instance. In such an era where market volatility can be quite extreme and gut feeling no longer satisfies a board or a CFO, why has the rigorous measurement of procurement performance become such a priority for companies like steel mills?
So if you work in a steel mill, if you look at the cost structure of a steel mill, raw materials have always been very, very important. So I would say a typical steel mill in Europe, between 60 and 70% of the total cost base is raw materials. So naturally, in raw material procurement, you have a very high impact on the cost. I've been in the raw material markets for 16 years, and there have always been volatility and cyclicality. That's nothing new. Raw material and steel markets are very cyclical market. But clearly what we've seen recently with the spikes after COVID, the spikes after Ukraine-Russia war and certain commodities, now with the Iran war, what is happening in the markets, this is taking it to a new level. And I would say when you're in raw material procurement and markets are stable versus markets are very volatile, in stable markets, there is less to gain and less to lose, and vice versa in more volatile markets, which are going up and down more strongly.
Interesting. And so we can maybe, if I may summarize that properly, so commodity volatility, regulatory scrutiny, it's made procurement performance more measurable. There's a need for it to be auditable rather than just anecdotal, if I may call it so.
Yeah, so absolutely. More volatile market means that the impact is bigger and the need to measure it is also bigger. And if you look at just the last 3 years in the steel industry in Europe, those 3 years have been very, very tough. Profit margins have been very thin. And it also means that management wants to see what is the impact that our raw material procurement team is having on the bottom line, and how is it changing? Is it improving? Is it going in the right direction? And that's why measuring performance in raw material procurement is so important.
Well, let's double click on that measurement problem, if I may call it so. So many companies already track commercial performance. Procurement teams are reporting savings based on, say, a budget or a price from a point in the past. So why is such benchmarking often misleading, and what mistakes do you see happening in this process?
Yeah, so I think raw material procurement is different from procuring indirect materials or other materials, because there's a market out there and there's a market price. So if you are comparing yourself against the budget, but the budget relies on assumptions which turned out to be wrong, then also you cannot clearly measure the impact what you're having in the market, or if you're measuring yourself to last year's price. So as the market prices are going up and down, and usually companies are not big enough to influence the market price as such as a whole, it doesn't really reflect the performance, but it really is mostly driven by the market ups and downs. And that's, I think, something that also management needs to understand and learn. And in most steel mills, I think this knowledge is there, that in raw material procurement, you need to use different methodologies to measure savings and performance than you would do so in other categories.
All right. So if we want to talk about specific mistakes, let's say, or specific, let's not call it mistakes, more like current activities that can be misrepresenting the situation. Comparing to, let's say, a price from last year, or comparing against a set budget, or a purchase that happened before. What kind of challenge are we expecting here for people to have? And if we can put some meat on the bones, like, can you give us a specific example that highlights this measurement gap?
Yeah, absolutely. So every company does their budget and they budget prices. So maybe for manganese metal, they budget a price of $2,000. But now reality turns out that energy costs go up, and transportation costs go up, production costs go up, because energy is the most important driver of production costs in most metal markets. So I come from the nickel market. I know that 60 to 70% of costs for producing a ton of nickel are somehow rooted to energy. So now this budget of $2,000 suddenly doesn't reflect reality anymore. Maybe the price goes to $2,500, and the procurement team manages to buy it at $2,400. So this is now $400 above the budget, which was made at the time, but it's still below the market price of $2,500. So if I just measure against a budget from the past, which was relying on different market conditions, then the performance of the procurement team is not reflected in the right way.
That is quite clear, and I mean, I appreciate the example because it gives us a bit of an understanding, or more of a visibility of this. But I mean, now that we've talked about the challenges and we've talked about these issues, for the sake of this discussion, I think it's fair to say we've effectively removed this old way of measuring. Let's build a new way. If traditional measurement does not work well in raw material procurement, how and what should procurement teams measure instead?
Yeah.
And I think you prepared some slides for this. Let me. I'll share some slides as you speak. And
So it's a fascinating question, and I don't think anyone in the world has the answer, because measuring performance in raw material procurement is really a complex and multifaceted topic. So I would say, first of all, there's different things you need to measure. One is, what is your price performance? What are your savings that you are negotiating and achieving when procuring the raw materials that you need to procure for your operations. This is, I would say, the commercial performance. Then there's other types of performance. There's also the topic of compliance and governance. So you want to play within the rules that the company has set out. So there could be a rule that every contract needs to be approved by the right level of managers before it can be signed. There can be an internal guideline that you always need at least 3 offers before you can conclude a contract. So this is also a type of performance. Do you comply with the rules the company has set out, and also comply with the legislation and the rules of the jurisdiction that you're acting in? And the last performance, you can also talk about efficiency. So the workload that there is in raw material procurement, in finding new suppliers, qualifying suppliers, managing RFQs. So what is the kind of the level of capacity that you need to get this workload done in the best possible way? And that's then an efficiency KPI.
We will get to the compliance and efficiency. So let's start first with the savings and dive into that part in particular. So we're seeing here 3 different saving metrics. What can you tell us about them?
So savings is probably something that management is most interested in, and there's different ways of measuring savings. So we can see here 3 different types. I'm going to explain from left to right. So one type of savings is what we would call negotiation savings. So most of the time there is a competitive process where the raw material buyer reaches out to selected suppliers or a pool of suppliers for quotes. And what then happens is a negotiation. And there will be a first round of offers coming in from the suppliers, and that can be set as kind of an internal benchmark. So the best offer in the first round of negotiation will then be compared to the final price that is achieved in the negotiation when the contract is concluded. And then the difference between the two, the best offer in this first round of offers versus the final negotiated price, can then be called a negotiation saving.
All right. Let's break it down. I'll move to the next slide where we talk about it in particular, and then we'll move to the other ones. So when we talk about negotiation savings, there are pros to it. There are also limitations for it as well. So when we look at this metric, what does it actually reveal about how procurement teams run sourcing events?
I think the advantage of this metric is that it applies to every single category, every single product that is procured, given that there's more than one supplier and more than one offer, because it can be measured in all of these cases. At the same time, it also shows, is there competitive tension? Is it possible for the raw material procurement manager to negotiate the prices? So are there alternatives? So I think that's definitely a positive about this measurement methodology. I think the criticism sometimes can be that one can argue, are these then really savings, hard savings? And then the argument is, but what if the supplier already starts at a higher level because the supplier anticipates that the buyer will be negotiating? So for me, these arguments are valid, but I still think it makes sense to measure negotiation savings. And it does make sense to measure it because it helps you also to improve. So you can look at your negotiation savings over time. Maybe in the past, you were negotiating 2% from the first offer to the final offer, and now you're negotiating 3%. So you can see a clearly positive trend here. Or maybe in some categories, you can see that negotiation savings are higher than in others. And that tells you something about the person negotiating, but potentially also about the category and the competition that there is in the category.
Right. Well, this is one, right? So negotiation savings is one type of one metric that can be focused on. The second one is what we call new supplier savings. Now, tell us about this, and why is it so important to track this separately, especially now when supply chains are shifting away from traditional hubs, etc.
Yeah. So new supplier savings, that's a different type of saving. So I would say this is more of a project-based saving. So for example, you might have a category where you see you only have 2 qualified suppliers. And now you would think, okay, let's start a small project. Let's find additional suppliers to create more competitive tension, but also to create more choice and more stability and reliability by having 1 or 2 additional suppliers. Then work needs to put into finding those suppliers, qualifying those suppliers, and then they will participate in the RFQ. And then you can start measuring these savings, and you can actually see, does the new supplier win the business? Then I think it's quite easy. Then you can compare the new supplier to the best alternative from your existing suppliers, and you can just calculate the difference. Or does actually the new supplier help that there's more competition? So potentially in the first round of negotiation, the new supplier offers the lowest price. And this offer in hand gives you the opportunity to negotiate with the existing suppliers in a better way. So this is then a little bit more indirect, but it also helps to achieve a better result in the end. And this new supplier savings is kind of an example for this project-based approach of measuring savings. Another one would be finding substitutes. There could be a project to say, today we're using manganese metal flakes, but we have the hypothesis that by using manganese metal briquettes, we could actually save money. And then there's a process. This needs to be discussed with production. Suppliers need to be tested and qualified. And then in the end, the question is, does it actually result in a better total cost of ownership, taking into account also production parameters like yield, taking into account the price, and that results then in a net benefit. And that would be another example of this kind of project-based savings approach.
Mm-hmm. Great. Well, I mean, so we have negotiation savings as our first metric, new supplier savings as our second metric, and the third one is what we call PPV. So purchase price variance. You argue that PPV against market indices is actually the most important methodology here. So why is this the standard for a procurement team today?
Yeah, so I think in raw material markets, as we discussed, they're going up and down. The best methodology out there to measure it on a holistic level is really to compare against the market price. So when the raw material procurement team concludes a contract at a certain price, you can compare this price to the market price at the time. Now, there's a few things to keep in mind. So there are certain indices out there. So in steel raw materials, you might have heard about fast markets or Platts or CRU, but they might be on a different basis than your particular contract that you've concluded with a supplier. So you might have concluded a contract with 60 days end of month payment terms, but the index is based on cash payment. Then what needs to happen is a normalization to really make your price that you've achieved with your supplier comparable to the index. So I think that's one of the complications of measuring the purchasing price variance. The other one is you need to have actually a reliable index. And I would argue there are some steel making raw materials where there are quite robust and good indices out there, but there are others where you will not find so easy a good representative market price index.
Right, right. Well, I mean, you shared with us this slide here to give us a bit of a visualization of it. Tell us a bit more about this.
Yeah, so this is just an example of how this could look in practice and how a team could measure performance against an index. So this is now here the ferromoly index, which you can see in gray, in euro per ton. Normally, ferromoly would be in euro per kilogram more, but that's okay. And you can see now the dots. And every dot is actually a purchase that was made by the team. And these purchases have already been normalized so that they can be directly compared to the index on a like-for-like basis. And you can now clearly see whether the team manages to achieve to buy below the index or on the index. And I think in most cases here that is the case, or whether there is actually a purchase which has been made above this index. And by tracking this over time, you can actually get a good feeling for how your purchasing performance have evolved relative to a market price index, which is obviously going up and down over time.
All right, so this is great. We've talked about the three core metrics here now. Before we continue, a reminder to the audience: if you have any questions or any comments, feel free to add them in the chat and the questions. We'll get to them towards the end. But Sebastian, we've just established that PPV against an index is the standard, right? This probably one of the best, if not the best way to measure at the moment. So as we know, the market is not a level playing field. You can't just compare an offer from a local recycler with an offer from an overseas smelter and call it a day. And in fact, since the beginning of this year, the stakes have changed with CBAM entering its definitive regime. So a cheap offer from a high emission region might look like a win on paper, but if you don't account for the 60 to 100 euro per ton carbon penalty, that saving can actually be a loss. So beyond just carbon, why is normalization and even rigorous normalization adjusting for things like FX, Incoterms, payment terms so critical before a procurement team can even begin to measure performance?
Yeah, so I think then it can get quickly very complex. And you mentioned some of the things. So we have now things like duties for certain ferroalloys, for example. We have now CBAM in place where there's a cost. And depending on how you buy, on which Incoterm, you need to factor in all of these additional costs. So if you're a steel mill buying on a DDP basis, actually is a bit easier. So as long as the supplier agrees to carry the CBAM costs and doesn't have anything in the contract that this will be passed on to the customer, you don't need to worry so much. But if there are quotes on an Ex Works basis in Rotterdam, immediately it's important to understand, is this already duty paid? Is this already CBAM paid? Or do these duties still apply and have to be paid? And that's obviously a new complexity that has come in over the last year.
All right. Well, I mean, most teams already recognize that these variables exist, but they try to manage them in giant Excel files. I think that's an issue across the board. So, what happens when companies try to do this in spreadsheets?
Yeah, so I think the normalization is getting quite complex, especially if you're buying 20, 30 different raw materials with different indices, which need to be adjusted for freight, for different payment terms. And then using an Excel sheet has several drawbacks. So obviously there's no history to it. So some of the assumptions for normalization will change. So interest rates change, transportation costs change. Now with the oil price going above $100, they will be certainly going up. So these normalization assumptions in the spreadsheet would have to be updated. But there's not really a clear track record. When was this updated by whom? Which calculation was done with which assumptions. It's also sometimes not so clear, is everyone allowed to see everything in that spreadsheet, or do you actually need a rights and permissions management that certain people are only allowed to see certain things? And so very quickly, you are getting to the limits of Excel, and you rather should do these things on a system. And if I look at some of the companies that we've been working with, these savings numbers also get reported externally to investors, which means that auditors will also take a look and ask, so how was this number calculated, this saving that you've reported to the capital markets? And then having a system where all these calculations, assumptions are well documented is a huge advantage and saves a lot of time.
Right. Well, you prepared a quick demo video for us from the platform. Let's take a look at how this actually looks in practice and how we can normalize these quotes digitally to make them instantly comparable to a market index, for instance. So I'm gonna share the video here. Let's have a quick look.
So I'm working here for Austrian Stainless GmbH, which is a steel mill that has just put out an RFQ into the market for 48 metric tons of FIMO. And you can see here that I've already received 3 offers from Kreft & Company, Mortex, and Metal Impacts Sales. And you can see there are different currency being used. So 2 offers are in dollars and 1 is in euro. And we already see that one offer has been submitted with an Xworks Rotterdam Incoterm. So if we hit the compare offers button, we get all the details of the 3 offers, and we can see all the changes that were made to our RFQ. And we can also see here that in one case, the payment terms have been changed to 30 days. So now, in order to compare the 3 offers, I can use the Metalshub offer normalization. So I want to normalize the offers to DDP, my plant in Austria, and US dollar. And if I now hit on normalize, you can see that Metalshub creates a landed cost in dollar per kilogram moly. And I can see now this first offer from Kreft & Company is actually the best offer on an apples to apples comparison. So what is happening here? We can see this one has only 30 days payment terms offered. So what we do is we use an interest rate that the customer would define and normalize the offer for the different payment term. So in this case, there's a penalty of $8,214. For this third one, you can see it's based on Xworks Rotterdam. And you can also see that we are using transportation costs to calculate from Xworks Rotterdam to DDP Austria. And then there's an additional cost added to this offer, which means that it goes up from 65.90, which is the Xworks price, to 66.02, which is the DDP price. And you can see this one was in euros. So Metalshub automatically uses the ECB exchange rate and changes this euro per kilogram moly offer into a dollars offer. Now, this is very helpful when I need to make a decision who to buy from and which is the best offer on a DDP term. But I maybe also want to compare the prices and the offers to an index price. So if I look at a ferromoly index from Platts, I can see it is based on in-warehouse Rotterdam, which means Xworks, and it's based on net cash payment. So I can also use now the advanced normalization to change the parameters of these offers to the index ones. So by going to the advanced options, in edit terms, I can say I would like to normalize this to Xworks, Steinweg Rotterdam, with prepayment. This is exactly what the Platts index shows. If I hit the button, I can now see that here in normalized terms 1, all of the offers are modified into a dollar per kilogram moly price Xworks Rotterdam with prepayment. This is very useful because it saves you a lot of time, and also it ensures that all of your team and all of the users are using the same terms for normalizing the offers.
Now, this is great, Sebastian, and thank you for preparing this video for us. I think it really shows how fast and easy it can be to do it on Metalshub, because it also eliminates human error. Everything is done by the system itself. Anything you'd like to add to that before we move to the next topic?
I just want to add that I'm really proud of the team. So this looks very easy, but to develop this, it's a great effort from our product and engineering team. And it's very industry specific. So it works for things like iron ore, coking coal, scrap, ferroalloys. So I hope it's very useful to our users.
Absolutely, absolutely. I totally agree with you. I think the product team has done a fantastic job with this, with how the platform looks and functions. But let's move on. And I'm mindful of the time, so we can keep some time for people to ask questions. Savings are clearly one of the most visible metrics in procurement, especially for boards and CFOs. But as we've seen on Metalshub, and as you've mentioned already, they're only one part of a broader performance scorecard that also includes compliance, efficiency, or even what we call total cost of ownership as well. So why is that broader perspective necessary?
Yeah, so I think in raw material procurement, you have the situation that a relatively small team of a few people controls a very large spend of sometimes billions of dollars. So just looking at the commercial performance is certainly not enough. So a few other things you need to look at. So commercial is the one thing, but you need to look at the total cost of ownership. So if you're buying from new suppliers, but those suppliers don't deliver the quality or don't deliver on time, actually a saving post-trade can turn out to be the opposite, actually paying additionally if, for example, you have to reject the cargo and you have to buy something new. So looking at quality claims, weight claims is certainly something that needs to go into this total cost of ownership perspective. Then on the few people and high spend, so in a lot of companies, it is also important that there are KPIs around compliance. And in many companies, there's a compliance rule that certain contracts, before they are signed or legally agreed with the supplier, they need to be approved. And then there are usually thresholds depending on the value of the transaction, who needs to approve this, but these approvals need to be then documented. In some cases, they can be documented after the contract has been concluded, because some markets just move very fast, and there might be internal mandates that buyers are allowed to enter into these contracts and get the approval after the fact. But in other categories, in other companies, it might be that it always needs to happen before the contract is agreed. And Metalshub then helps companies to really document this approval in the right place, in the right way, to make sure that these internal compliance rules are followed. And what comes out of it is then a compliance KPI. So ideally 100% of the contracts enter into received an approval before the contract was legally agreed.
All right. Well, let's add to that as well the topic of risk management, right? So what indicators show whether procurement teams are managing supply risk properly?
Again, many aspects of risk. I think one of them is you need to have enough suppliers so that you can always be sure in each category that there's a competitive process and that you're actually able to source the products that you need to source for your plants. And for that, having such a scorecard is quite helpful. So on the left, you see now a different entity of a group of companies. And you can see in the top left, ferrosilicon, there were 4 inquiries or RFQs, and on average, there was 10 offers on those inquiries. So that is clearly a good sign. There's a lot of choice of suppliers. Even if 1 or 2 suppliers would have a problem, there's enough other suppliers who can supply the product. If I now look on the right-hand side, so there's now calcium, silicon, manganese, which is maybe more of a niche product, and there has been 1 inquiry and only 1 offer. So that, I would say, is probably a red flag, an orange flag or a red flag. So there is certainly a lack of competition, and potentially also there's a risk that in case this one supplier has a problem, that the company, the steel mill, could run into trouble sourcing this material. So then with these KPIs, you can say, look, we need a plan for action. In these categories, we should look whether we can add some suppliers.
All right. Very clearly explained here. I mean, and I'm mindful of the time. Let's very quickly revisit compliance, because you mentioned it. I think it's quite important. What can you tell us more about it here, maybe to summarize what you just said?
Yeah, I think this is quite simple. So you can see now a group of companies with different entities. There's a number of deals or contracts that they've entered into. And you can see in 99.83% of the time, approvals were in place, and that is well documented on the Metalshub system. And then there was 1 case where no approval was documented. And then it is to go into the details and see what happened there. Maybe the approval was documented in another system or in an email. Or maybe this was a process breach and actually there was no approval in place. And then this can be looked into in more detail.
All right. Very nicely explained. Thank you, Sebastian. So we've seen we've talked about sort of the challenges early on. We've talked about the different metrics. We've seen how normalization looks throughout the platform, and how risk management and compliance and efficiency are all also embedded into the way the platform works, and how that compares to existing sort of traditional ways of measuring and normalizing, like what happens in spreadsheets. So to close the discussion and move into Q&A, I'd like maybe from you to maybe give us your advice. If a procurement leader wants to improve measurement tomorrow, what are the first steps? They should take before they begin the process.
Yeah, I think first of all is always strategy. So what is the raw material procurement strategy as a whole? And also what are the category strategies and what do you want to achieve? I think it all starts from there. And then you need to think about how can we measure these things and how can KPIs help us to show us whether we are on track to achieve that strategy. That's probably then the second step. And then the third step is how can you make this measurement work in practice? My experience is that a lot of managers and leaders are very ambitious and set out plans, what they want to achieve. But then the operational detail is very important. Because if it's very hard and very cumbersome for the team to update the KPIs manually on a weekly basis, then guess what? Often it will only happen in the first few months, and then things will not be updated anymore. So my preference and my advice would always be try to automate as much as possible when it comes to reporting and putting together KPIs and measurements, because really that's the only way to build something sustainable, which will last.
I think that's a great point to end the discussion on before we move into questions. Sebastian, thank you so much for the insights. Really great. I learned a lot through this.
Thank you,
and we could jump into. We have a couple of questions here before we finish this. So for others who want to add some questions, feel free to do it as we look at these. But this question is, and I think we talked about it slightly in the video. Does the platform automate the landed cost comparison, or do I still have to punch in the logistics premiums myself?
That's a very good question, and it plays into the same thing we just said. So if it's very hard, then usually it will not happen. So we have tried to automate as much as possible also the inputs. So when you look at exchange rates, for example, we built an integration to the European Central Bank daily exchange rate. So you don't need to manually enter exchange rate, but it will be pulled. The same can be done with interest rates. So there's things like the LIBOR, there's other reference interest rates. So you could set, for example, your normalization policy as LIBOR plus 2%, and then automatically the normalization would be done with this assumption. On logistics, it's a bit more tricky because some materials are delivered in bulk, some are delivered in containers, some are shipped with vessels, other with trucks. So what we've built is an integration with a trucking provider. So trucking costs from, for example, Rotterdam to a plant in Europe could be automatically pulled, but there are certain freight rates which would have to be manually entered. Yeah. So we are still working on it. So the system is not perfect yet, and we're still improving it. And that's certainly an area where we can still get better and improve more to make the life of the user easier.
Absolutely, there's always room for improvement, and I think having input and support from the users is always a great way to improve this as well. Another point here, which is quite interesting, is that we mentioned the platform maintains an audit trail of the negotiation. So this person is asking, does that mean every internal comment or an offer version is tracked? And how do you ensure that sensitive supplier data and internal notes stay private from other users on the market?
Yeah, so there are two sections of the platform. The one section is visible to you and to your supplier. So for example, if there's a negotiation going on, there's a chat which both can use, and the information in the chat will be stored beyond this transaction in the system, and both the supplier and also the procurement manager can look at this chat because this is between you and your supplier. Then there's another section which is called the internal notes. This is for you internally. So not your supplier will not be able to see that. But in some cases, there might be some handover notes. One person goes on holiday, or there might be a note for the approver or the manager why a deal was done in a certain way. This is absolutely private. And when we built the platform, keeping data separate and stored in the right way with the right access concept was one of the most important things, because coming into this market, we knew that there's very sensitive data that we're dealing with here. So we have a very experienced CTO, Tristan Fischer, who always keep this in mind, that private data is being kept private and that we have the highest standards in our software for managing this.
Absolutely. And yeah, a big shout out to Tristan, if you're watching as well. Great stuff. Sebastian, thank you so much. I mean, this has been really helpful. I think we're quite close to our time limit. So I'll just take the last couple of minutes to thank you first for providing fantastic insight into procurement performance measurement and what we need to do to ensure accuracy and growth. So Sebastian, a pleasure to have you, and I hope I can have you again in another session as well.
Thank you, Samir.
And again, thank you to everyone for joining us here at MetalshubTalks. We appreciate you joining us to explore different topics like this one today. I think my colleague Davide in the chat has shared also our next session, so feel free to check that out and the upcoming sessions as well on our website. But thank you so much for joining. It's been a pleasure having you all here, and I hope you enjoyed the discussion, and I look forward to seeing you again in the next session.
Thank you. Bye-bye.
Bye-bye.